What's up guys, welcome to the channel, welcome to the fourth episode of the PA course. Today is the second video. We're going to talk about an actual setup, and this setup is called the origin. An origin trade is one of the cleanest and high probability setups we have in price action trading, and it's also maybe the easiest to understand because it only really appears on higher time frames and it's very strict. You can spot it easily, you can trade it very easily, so maybe I should have put it first before the reversals, but why I put it second after reversals, I'll explain that in a second. Like and subscribe as always, I really appreciate that, and let's get into the video. So an origin is the first gain and hold price makes after making new high or new low. Let me show you an example already. Let's go on the weekly, or let's go on the daily maybe. Let's go to the bottom of the bear market on Bitcoin, where the price make a low. Let's say this zone was a low, price started pumping here. You see only green candles, create the hold here. This is the hold. Made new highs, very important of course, after holding you create new highs, and price returned to the zone and started pumping. This is an origin because this is a very important price level. After the bear market we made a completely new low. After the bull run, price started gaining, so we got confirmation that the bear market was over. We created a hold here, started pumping again, price returned to this zone because this zone is a very important zone more later, and price started pumping. So that is basically very easy what an origin is. Origins matter because they act like a support or resistance zone. In this zone, a lot of buy orders, a lot of liquidity, a lot of orders people needed to buy to make this big move happen after this big move already happened. It's literally a very important level, and that's also where price will likely return to pick up liquidity to continue the trend afterwards. It's basically a bit similar like the reversal time 1 setup. So as I just mentioned, the origin is the first gain and hold. So you see the gain here, gain of the low here of the previous lows, the gain and then the hold. But very important to know is not every gain and hold is an origin. Every origin is the gain hold, but not every gain hold is an origin. Why do we call this an origin and not just the hold? Because these are origins on a bigger time frame. These are zones and levels that actually have meaning, not just every hold after a local low or local high has been made. Literally very specific zones, because as mentioned, this is very specific after the bear market, after the lows on Bitcoin, start of the bull run. This is something very important, and not just every origin like here we gain and hold, or here we gain and hold. Not every level is an origin, not every hold is an origin. Let's look at a couple of examples. Again, pictures from the Discord because I have a full course there, so join if you're interested in reading it on your own tempo or level. But just the same thing I mentioned in the bear in Bitcoin, so 2023 created a low, and as mentioned with the reversal thing, price created a reversal, made a lower a swing high, lower low, gain, hold, new highs, and price returned to that hold or gain, or how we call it now, origin, because it's a very important hold, and continue to trend upwards. This is a picture perfect, maybe not picture perfect because they didn't sweep it incredibly here, but more about it later why they didn't sweep it with just a wick. But this is almost picture perfect origin trade or continuation of an uptrend origin trade. Here's the second example. We're around 50k now on Bitcoin, and this is also to mention that price can wick it perfectly as you see here, but also a perfect example of it doesn't have to be the extreme top or the extreme bottom of a coin. Here we saw price here, price started gaining this level with the white marker, this high, price gained it, price hold, and made a big impulse. A big impulse is also nice to have in an origin trade because it increases probability of a trade actually working out. Because the big impulse requires a lot of capital, a lot of buy orders, so a lot of liquidity is left behind here, a lot of stop losses, liquidations, etc. So price will likely return to this after the fill ran out to sweep it and then continue the trend. So as mentioned here, you have the hold here, and price in this example perfectly wicked it like we want to see it actually in the reversal type 1 or type 3 setups. And why did I say in the previous example in the bear market when we were down at 20k, price didn't literally sweep it, but had a couple of candles and then made the move? Is because here the zone is still big. As you see, 40k to 50k, the zone is still big. I'll show another example later. But when those zones are very big, there's a lot of liquidity and not just one level. Not one specific level will hold this dump because it's a lot that happened. So in this example it does, but as mentioned in the previous example, it had a couple of candles here. Price has to chill, pick all the liquidity in the zone because of course it's a level, but this is such a big level. The origin is such a big thing that it's more of a zone as well. So there's liquidity here, and if it's very big, price has to like take a breather and pick up all the liquidity and then make the move. One in this example, or maybe smaller origins but still worthy to call it an origin and not just a hold, price can just sweep it and continue the trend. This is picture perfect. You can't have it more perfect than this. Picture perfect, because you can have a very tight stop loss, TP very quickly, and then had a nice runner to all-time highs. So this is the third example, and you have to pay attention for a second here because there's a lot going on, but let me explain it. Of course, this is an inverted chart. So price here made a completely new low, and at the time it was an all-time high. I know it's inverted, so it's actually high, but to keep it easy, let's talk about it as a low. Price made a complete lower low. Then it started gaining the move to the low. Started gaining and created a hold here and made new highs. And with this example, I want to show you that price doesn't have to pump to the moon after creating the hold or retesting the origin, because this is the origin as you see here, and in this circle price retested it and it only pumped 6%. And in this example, I want to show you that the origin doesn't mean it's the start of the bull run or the end of the bull run, start of a bear run. It can also just be a small bump. As you see here, 6% is not small, you can still trade it. As you see, it's not like it wick to here, so it's very short. You can have a very nice RR-wise trade here, so it doesn't pump to the moon. So in this example, you have to remember that an origin is something big, it sounds spectacular, but it doesn't mean price is going to pump to the moon. This is also a hold, but you can call it an origin because it made a new all-time high here, or low in this example, created a nice structure here, gain, hold, new highs, and price returned to this origin and gave a nice 6% bump. So let's get into the specifics now. It's actually reversal type 1 setup, because you wait for price to literally sweep your level. So basically this is where you trade reversal type 1, but the stop loss and the execution, the stop loss and the TP are not really the same, because with the reversal you just had a tight stop loss most of the time, 0.40 or sometimes it's a bit bigger. But on this, as you see here, price sweeps, I don't really know, but approximate maybe 2 to 3%. So if you had a 0.40 stop loss here, you would have taken an L, and probably in almost every origin trade you would have taken an L, because 0.40 is not enough room for price to breathe, because this is a big move. This is on the daily, this is not on the 5 minutes, 15 minutes. These trades will be open for a couple of days, but I'm not a fan of trading and having it open for a couple of days. But origins have such a high probability that it's worth it. So in this type, and you have to feel it, but I'll explain a trick later. Your stop loss doesn't have to be 1%, can be easily 5%, because price started pumping. And of course your TP, your first TP shouldn't be 15%, but if you have stop loss of 3 to 4% there, then TP of 12%, I know it's 3 RR, but it's a bigger time frame trade, and also the probability is there. But here's a tip on how to know whether you should have a tight stop loss, a very big stop loss, or what your stop loss should be. So from the low to the hold, to the origin, what's that? From 50k to 20k. That's, I can't do maths that quickly, but like 10, 15%, maybe 20%. If it's that big, you shouldn't have your stop loss at 1%. You should have your stop loss around 5%, let's say. In the other example, like the last example I showed, where it only pumped 6%, the percentage-wise, the gain from the low to the origin was only 2, 3, 4%. Then you should have a tighter stop loss and don't have a stop loss of 10%, like in this example would have been more reasonable. You understand what I mean? In this example, this pump from the low to the hold, apologies, is a lot. So price needs more room to sweep it and to continue the trend here. So you have a bigger stop loss. And an example where, for example, the hold was here, price return, this is not that big. You can have a tighter stop loss of 1 to 2%. But again, this is a nice trick, but still, price action. If you want to learn a strategy, the edge comes from collecting data and experience. If you start trading reversals, and I know with reversals it's not really that nice, because it doesn't appear every 5 minutes, like a reversal potentially. Collecting data like 50 origin trades will take a lot of time, but still, after that you will know, this is a very important origin, for example the start of a bull run, this is the gain, I understand this will be the type of pullback or the type of sweep that will happen. You start learning that after a while, and that's where your edge comes in. And still, origin trades have a high probability, because liquidity zone, I explained everything, a lot of liquidity, a lot of buying pressure, a lot of stop losses ready to be swept in that zone. So price starts pumping and continuing the trend afterwards. So TP wise, we always aim for a 3RR setup, but of course you shouldn't just base your stop loss because it's 3RR. Look at previous levels, at failures, at lows, at resistance zones. We're going to talk about failure in a separate episode later, so surely tune in for that because that's very important to base your TP off. But don't just do it blindly off 3 hour or look at previous levels. So I hope this was a pretty easy and quick explanation on what an origin is. To summarize this, it's the first gain and hold after price made a new low or new high. It's a zone where the probability of price sweeping it and continue the trend is very high, because the origin is a zone where a lot of liquidity lays, and I've talked about this 10 times. So a lot of liquidity, a lot of stop losses, a lot of buy orders. Price will likely return to that, retrace to it, and continue the trend. For now, that was the video, very easy. If I were you, I would go to the charts, look at previous lows from Bitcoin, from Ethereum highs, and look where the hold was or the origin, and look if price swept it and how that went, and start analyzing already. Because I know you can't trade the past. If you backtest, you can, but I'm not a fan of it. But you can still look and maybe even write it down, have it into your Google Docs. I don't know where you learn and write everything down you learn, but then you're already starting to learn and collecting data to have a higher hit rate and win rate when you start trading out yourself. For now on, thank you guys for watching. Join the Discord as always. I mentioned always join it, and I'll see you guys in the next episode. Bye.